Not sure what a down payment is exactly when it comes to buying a house? You've come to the right place. Stay tuned to this video. Hey guys, this is Nobu with Making Sense of Debt, where we discuss understanding finances, leveraging debt, and finding your financial freedom, whatever that looks like to you. If this is the first time on this channel and you like to talk about money, credit, or real estate, go ahead and hit that subscribe button so you don't miss any future videos. If you are a returning subscriber, thank you so much. I appreciate your support. In this video, I'm going to walk you through exactly what a down payment is when you're trying to buy a house and more or less how much you're going to need to have saved for that down payment. But before we get into that, drop a comment below and let me know what are some other words when it comes to buying a house that you have heard and you have no idea what the heck it means. Go ahead and drop that in the comments below. So let's start by going over what a down payment is exactly. A down payment for anything is a specific amount of money that you are going to put up front or put as good faith when you are getting a loan product. There are down payments for all kinds of loans, but what we're going to talk about today is down payments for mortgages specifically. So a down payment is only a portion of the money that a borrower needs to bring to the table when they are purchasing a house. There are additional funds as well that are included in closing costs. If you want to know what a few of those costs are, go ahead and grab a copy of my free home buyer's checklist. I will link the website where you can grab that in the description box below. Now, whether you are buying a condo, a single family, a multifamily property, you're going to have to bring a down payment to the table. For most loans, that down payment doesn't all have to come from the borrower. So if you don't have the amount that's needed, you can potentially get gifts from a friend, a family member. Each mortgage type has different rules as to who can give a gift and how much a gift can be for. But with all the different loans, what is the same is that money that's given to you has to be trackable. So your grandma can't just grab money from underneath the bed and give it to you. There has to be a paper trail of where that money is coming from specifically. So the second thing that comes up a lot is, do you have to put a 20% down payment? There's this idea or conversation, I don't know where it came from, that you need to have 20% down to purchase a house. That is absolutely not correct. For both houses that I purchased, I only put 3.5% down. What is that 3.5% of? It's 3.5% of the purchase price of the house. That 3.5% down is specifically for a mortgage type that is called an FHA loan. If you're interested in doing a conventional loan, then the minimum percent down is 5%. Most people are going to end up getting an FHA or a conventional loan. There are other loans available as well, but two of the other more popular other options are the VA loan and a USDA loan. For USDA or VA loan, you can actually get 100% of the purchase price of the property covered in a mortgage loan. So the percent that you put down, that 3%, the 3.5%, or that 5% is going to impact your interest rate. The more that you put down for a down payment, the lower your interest rate is going to be. Low interest rates are good because it just means that you are borrowing money at a cheaper rate, which means that you save money and you pay the bank a little bit less. And that interest rate is also going to impact your payment. So the lower the interest, the lower your mortgage payment is as well. So what are the benefits of putting that 20% down? Well, the 20% down is going to impact first and foremost something called your mortgage insurance premium. If a lender is loaning you $500,000, they really don't want you to stop paying and then be out $500,000 off the books. So this mortgage insurance premium is an insurance for the lender, but the borrower is the one that pays for that. So the lower the down payment, the riskier that loan is. So any loans that have a down payment of 19% or lower will be charged as mortgage insurance premium, which means that your mortgage payment will be more expensive every month. So putting that 20% down will save you that mortgage insurance premium payment. Another benefit of putting 20% down is that your mortgage payment will be lower. You are borrowing less money, which means that you will have less to pay back. And a third benefit of putting that full 20% down is that your interest rate will be lower. Putting that 20% down puts your loan in a less risky category, which means that your interest rate on this loan is actually going to reflect that and be lower. And again, that's going to impact your mortgage payment as well. So there you have it, guys. You should be very comfortable now telling a friend exactly what a down payment is. And by the way, if you're not sure what other things you need to think about as you're buying a house, go ahead and grab that free home buyer's checklist, which I'm going to link in the description box below. With that, guys, thank you so much for watching. I will see you next time as we continue on our journey to financial freedom. Peace.